It's no surprise that investors are still interested in crypto. Regardless of the torrent of negative situations that have plagued the sector, Bitcoin was first traded back in 2009, and at that time, you could buy one of the new digital tokens for less than a penny. The price rose steadily, although with some volatility, and in November 2021, it hit an all-time high of $69,000. The crypto world itself is quite interesting. However, two large-cap cryptocurrencies have caught massive attention. As the pioneer of cryptocurrencies, no other coin comes close to Bitcoin. The math behind Bitcoin's epic rise from its inception is so remarkable. The year started with a bang for the crypto market, as prices surged in the first 2 months. After its long and discouraging dump, many investors are starting to feel optimistic about the future. But why? It does have amazing track records. While Bitcoin landmarks are impressive, Ethereum is fast beating it to its game. Aside from its rapid rise and their distinction as the two biggest cryptocurrencies by market capitalization, they have certain similarities. Bitcoin and Ethereum are different animals developed for different reasons, and with different dynamics. Generally, crypto is a high-risk investment because it is speculative in nature. Even the experts can't say for certain whether it will succeed over the long term or not, and there's always a chance that the entire sector may not survive. With that, Ethereum is one of the strongest players in the crypto industry. It is not only the second-generation cryptocurrency, but it is also the most popular blockchain for various decentralized applications, from DeFi to NFTs to metaverse uses. Ethereum is still not perfect though, and it still experiences tough times with slow transaction times and high gas fees. However, several developers have various upgrades under the hood that will improve the blockchain, which is reassuring to investors. Now, whether you decide to invest now or later, it is important to maintain a long-term outlook. This is not a get-rich-quick system, but it can potentially make you a lot of money over time. For instance, even though Ethereum's price is down more than 66% from its peak in late 2021, it is still roughly up 115% over the past 5 years and a whopping 54,000% since its inception back in 2015. Simply put, if you had invested in Ethereum 5 years ago, you would have double returns, and that's regardless of the crypto meltdowns in the past year. So the question is, will Ethereum see those types of gains again? Well, it's not for certain. So much has happened in crypto already. However, as a result of its current low prices, now could be a smart moment to buy at a discount. And even if Ethereum does not experience those head-spinning returns, getting even close to its peak again could result in substantial returns. Ethereum has long been a favorite among crypto investors, and it has a slew of advantages that award it a jump on the competition. It is the most popular blockchain for DeFi and can host other cryptocurrencies on its network, including big names like Shiba Inu, Polygon, and Decentraland. In addition, Ethereum developers have proven that they are committed to building updates to improve the network. Last year, they completed the much anticipated update called the Merge. This update transitioned Ethereum from a proof of work, thus reducing its energy consumption. The next update on the horizon is that of Shanghai. Shanghai was expected to roll out somewhere in the middle of March. This upgrade will permit users to withdraw their stake Ethereum, which has been locked for about 2 years. This is a welcome update for the blockchain since staking is an integral part of the blockchain itself. These advantages help give Ethereum a leg up over its competitors, and it has more real-world utility than many other cryptocurrencies. You may be interestingly caught up in Ethereum's advantages and growth potential, but at the end of the day, Ethereum is not for everyone. Right now, there are a few reasons why you may want to avoid it. It's a high-risk investment, for one. Normally, crypto's speculative attribute means that there is always a chance that one can lose some money. If that's a significant concern for you, then this investment might not be the best fit. Ethereum has been remarkably strong so far, but as we always say, the future is still uncertain. Choosing the right investment is a sensitive decision because they are not all strong options. While everyone's investing preferences are different, Ethereum is definitely worth considering. Whenever the big question of whether crypto will survive or not is raised, investors are caught up in a position where it's difficult to trust their investment decisions. Ethereum might have problems in the crypto space, but if the entire sector is reduced to nothing, it could have trouble finding a place. While nobody knows whether things could go south, and we wake up one morning to discover that the crypto that we loved is gone, it's still speculative. And this is why you need to seriously consider whether you are comfortable with the level of risk in your portfolio. The second largest cryptocurrency by market cap remains one of the biggest players in the crypto space. Notably, it's proven that it can survive periods of volatility. Back in 2018, Ethereum's price fell off by a staggering 94%. However, it managed to rebound and become one of the fastest growing blockchains in history. While past performance does not determine future success, Ethereum does have a longer history than many other cryptocurrencies. So, what about Bitcoin? Bitcoin has been a hot topic in the financial space for years, with opinions about the cryptocurrency transforming from a revolutionary new asset class to a dangerous speculative bubble. Most experts concede that its volatility has historically made it a less than expected safe haven asset. However, recent market movements seem to have changed that tune. Bitcoin has been on a tear since the beginning of 2023, rising 45% since the beginning of the year. Over the same period, the S&P 500 is up by a mere 0.8%, and gold has gained 2.6%. Well, if you zoom out to a 3-year view, you'll find that Bitcoin has outperformed the traditional safe havens of gold and the broader stock market indexes. This time, gold is up by 19%. The S&P 500's dividend-adjusted total return stops at 49%. Over the same time, Bitcoin soared 367% higher. So, taking a 6-year view, incorporating the surge of 2017 and 2018 crypto winter into the data, we can see how a $10,000 Bitcoin investment performed against gold in the S&P 500 since the spring of 2017. But again, past performances are not an indicator of future returns. No doubt, Bitcoin has its share of volatility and its value could just plummet just as quickly as it has mounted. But it seems like Bitcoin has finally established itself as a contender in the category of safe haven assets. As investors seek out alternatives to traditional value stores, like precious metals or diverse stock indexes, Bitcoin's distinct characteristics and limited supply could make it an attractive option for those looking to protect their wealth against inflation and currency swings. From an optimistic perspective, market experts believe that Bitcoin could continue to serve as a safe haven asset in the future. Beyond the usual gold-like supply and demand equation, some Bitcoin experts point to the building interest from institutional investors and large corporations. As a result, the asset may become more mainstream and accepted as a legitimate asset class. Companies like Tesla and Block have added Bitcoin to their balance sheets, hence indicating investor confidence. The business software builder, MicroStrategy, has converted most of its cash reserves into Bitcoin and keeps buying more coins sponsored by a combination of cash flows, loans, and stock sales. Nigel Green even explained that the current banking crisis could be a springboard event for Bitcoin as traditionally inclined investors start to treat it as a lifeline in the troubled waters. Right now, the financial shakeup might propel others to follow in the footsteps of Tesla, Block, and MicroStrategy. No one has all the answers about Bitcoin's next direction. It's just like investors are living each day as it comes, scared of the unknown. The crypto winter is still thawing and another cold snap could bring Bitcoin lower. However, a fact that has been established, crypto is here to stay. And Bitcoin will probably be a reliable store of wealth for many years to come. Perhaps the MicroStrategy chairman might be onto something after all. The Bitcoin preacher has stayed resilient and bullish about Bitcoin, and devoted Bitcoin bulls like him should see stellar results a few years down the road. As attractive as Bitcoin and Ethereum seem, it's not advisable to put all one's eggs in a basket. There are other cryptocurrencies to add to one's investment portfolio. Taking a long-term perspective while allowing cryptocurrencies to get over speed bumps and challenges on the road to make sustained returns is quite advisable. Ultimately, the debate between Bitcoin and Ethereum as investment options come down to an investor risk profile. Both have the potential to perform well over time. Bitcoin is more established and mainstream, but on the other hand, Ethereum's higher risk may bring you with its potential for higher returns. However, if you consider crypto to be a game of numbers than prospects, then Bitcoin is the choice. Whatever preference you have, it's just important to make the best decisions. But that's going to do it for today's video. Make sure you click on the subscribe and notification buttons, and we'll see you in the next video.